Guys, it's Royce Jacob. Welcome back to the channel and welcome back to Waves Weekly. Series uploads every Saturday, but actually today on Sunday because it is a 3-day weekend where we cover recent news and current events that I believe will impact the markets. Now, these episodes are meant to be more chill, so go grab a nice drink. I'm personally drinking a nitro cold brew from Starbucks right now, vanilla sweet cream. These things are fire, but you drink whatever you want. I can assure you that I will be popping some claws with my lady who's now drinking them right after this, but I got to be on my A game for you guys, so I will wait. All right. Also, I want to let you guys know that I did finally get a new mouse, so no more stupid mouse issues. Magic mouse, not half an ass here. I've been telling you guys, man, I am a huge fan of Apple as a company, love the products, but the stock is just extremely overvalued right now. Not getting into that. Anyway, we will go over the topics that we're going to be discussing, and then we'll dive into each one individually. In front of us, as always, Bitcoin on TradingView. You guys know we're not going to go over too many charts today. These are more news focused. So that said, we will still get into Bitcoin. We do have some Bitcoin news to cover at the end, but let's go over some of the news that we're going to be talking about. All right, so first things first, Bloomberg FOMO redrawing U.S. stock charts as investors ride the wave. I thought this was super appropriate for the Waves Weekly. I have been storing this for you guys for this specific episode. Since it came out on the 2nd. This is before those huge drops on Thursday and Friday in the markets. So we will just go over this. There's a few solid points in here that I want to cover with you guys, a few charts to look at. But just to, again, recap on the carnage that we saw on Thursday, on Friday, and Friday on the markets. And this plays into what I think we'll be seeing next week as well. So I'll just use that to segue there. All right. Then we have some nice Mr. Peele right here, Jordan Peele. U.S. debt forecast to exceed GDP in fiscal 2021. We will read through this quick. This is some super, sweating, rightfully so. So we will get into this. We will then move on to this short read about Robinhood is reportedly under SEC investigation, could pay a $10 million fine. This isn't big news, but I just wanted to talk about this because they are under some scrutiny from the SEC for selling order flow to high-frequency traders, which is how Robinhood makes money. So that's more what I want to talk to you guys about if you're not familiar with how Robinhood actually makes money, how they're able to offer commission-free trading. Is for this, they could pay a $10 million fine. That is pennies right there. That does not make a dent in Robinhood. So this isn't a big deal, but I just want to talk to you guys about how Robinhood makes money if you guys aren't familiar already. We will then move into Mr. William Ackman. Bill Ackman, super big investor. You guys have probably seen him. He was around a lot. He was a big voice in the investment landscape during the initial part of the crisis because he made arguably one of the greatest short bets of all time. So we will cover this. He has a new blank check company, a new SPAC, super popular right now. You guys know the deal, like SPACs, just all the special purpose acquisition companies. I'm blank, like Nikola was one of those. There's so many of those. I'm blanking on some of them right now. But anyway, we will cover this. And he's trying to approach Airbnb to merge with his SPAC in obviously this blank check company. So we will go over that. It's not going to work out, but it's interesting just to think about where these things are going, especially now that the markets are getting a little shakier. So we will talk about that. And of course, you guys know we got to talk about Bitcoin. So 3 reasons why Bitcoin suddenly dipped under 10K today, then recovered. Okay, so Bitcoin is currently, as we can see here, sitting at just about 10.2K. You guys, the rest of the cryptocurrency market got absolutely demolished right here. It doesn't look too bad because, again, these charts did just recycle about an hour or so ago. But the 24 hours, as we will see right here, we will look at coin market cap, which is what I usually use if I just want a real quick look at all the coins, obviously, in the market. We will look at this. You can see here on the 24-hour time frames, there's just a lot of red. Polkadot, which many of you may have heard of if you're involved in the sector, down 20% today, a little more, probably a couple hours ago. But you guys, carnage in the markets. It makes sense though. You guys, we've seen such crazy run-ups. Nothing goes up forever. What goes up must come down at some point to some extent. So it's not crazy, but we will cover it. And before we do dive into the news, I will ask you guys to please check out the Complete Portfolio Daily Newsletter. First link in the description if you want to know exactly how I'm trading these markets right now, exactly what my positions are, and get a newsletter from myself in your inbox every trading day during market hours. I did also send one out this weekend. So I sent this kind of my breakdown for what I'm talking about today in Saturday's newsletter. So I do send those out sometimes as well. I will do that from here on out if you guys are interested. First link in the description. Also, I never shout this out, but I do have this. I've always had this linked down below. Check out the Waves merch. So check out Waves clothing. I do have every piece from this. I don't wear it just because I stick to kind of the all black theme here. But obviously I designed it. I think it's solid and it's a good way to support. It's a win-win situation if you want to support me and rock something that I believe is sick, at least. All right, so I appreciate it if you check that out. Again, link down below in the description. You know what? One more thing. I got to do this for my lady sitting right over there. Yeah, go check out. I just forced her. So my girl, my lady, she does do art. She has a big TikTok page, but I just convinced her to make a YouTube channel. Please go check her out. Show her some love, because she would appreciate that. And she has 0 subscribers. So let's try to get that to as many as we possibly can. I'm not expecting anything crazy, but I mean, we both appreciate it if you went and hooked her up with a little sub over there. All right. So anyway, that said, sorry for all the plugs there. Let's get straight into it. Again, we will get to Bitcoin at the end. We don't have too many charts to look at. If anything, we will be looking more at gold, silver. So again, you guys, gold, silver, and Bitcoin, that's the beauty of those 3 asset classes. They are 24/7. They don't sleep, which is always nice. Especially on 3-day weekends like this, there's a lot of people stressing over the markets right now, stressing over their positions. But Bitcoin, gold, and silver, it's a 24/7 market. So you always know what's going on there, as well as the dollar. So you can see right here, DXY. A big reason the market's pulled back, guys, which we will kind of get into later, is because the dollar is doing well. So just remember that, you guys, like quick rule of thumb, if the dollar is doing well, it's very likely that other assets, especially safe havens like gold, silver, Bitcoin, will fall a little bit, because people, it's always a trade. The dollar does well, people don't want Bitcoins, but when the dollar is tanking, like it's still technically in a downtrend right now, people are going to want Bitcoin. So that is why I'm still bullish on Bitcoin, gold, and silver, is because I still think the dollar is in an overall downtrend, although it is bumping up a little bit today, okay? So that said, we will get to that a little more at the end, but let's go over this. Waves. FOMO redrawing U.S. stock charts as investors ride the wave. S&P is trading about 15% above its 200-day moving average. Not anymore. Again, you guys, this was before those significant pullbacks, but it's just the principles in this that I want to talk to you about. Benchmark Tech's index gained about 10% over the last 9 days. The best August in 34 years, the fastest start to a September in a decade, 11 gains in 13 sessions, with records coming almost daily. So again, you guys, this just that says it pretty perfectly. The best August in 34 years. Just that in itself means that, I mean, it's probably not likely that you're going to have the best September as well in 34 years. Just considering the economy is trash right now. Again, you guys, there's such a divergence between the actual economy, which we will get into right here, and the markets right now. So that's why you guys know, if you've been tuning in, that I'm scared of this current market environment in the sense that I just think it's just a bubble waiting to burst, and like a big bubble waiting to burst. So again, you guys, there was so many signs that this was going to happen. So the superlatives are piling up for American equities that lately seem to only go higher. And while stocks are at all-time highs are bound to make for some eye-popping charts, the relentlessness of the latest rally is pushing some measures of velocity to levels that are turning heads among strategists and money managers. All of a sudden, you see some investors say, we've got to catch up, and they want to pour more money into momentum and ride the wave, said Chris Gaffney, president of the world market TIAA Bank. There's risk there, of course. There's always risk when you start chasing. But on the other hand, if the wave is going to continue, you ride as long as you can. Okay, you guys, and I think that's why I titled this like the wave of FOMO crashes, because again, you're riding the wave until you eat shit, right? Until you get smoked. So I think right now the wave has finally broken. The wave is over. Like, everyone should hop off the wave. I think I'm personally structuring myself. Those of you who are part of the portfolio newsletter know this. At this moment in time, I'm definitely structuring myself on the defensive side. Like, I am offensive in my portfolio, but it's with more defensive, more hedge, equity hedge plays. Okay, so just keep that in mind, you guys. If I haven't said it enough already, you know I am bearish right now on the equity markets, at least over a short to medium term time horizon. All right, so I want to scroll down here, read this. The S&P's 14-day RSI Relative Strength Index, I do have that on the chart so that we always look at on TradingView, which measures the magnitude and persistence of the price movement, is flashing a major warning sign. When the RSI passes 70, the index is considered overbought. It's now above 80, the highest in almost 3 years. So again, you guys, this is a big reason I use RSI, Relative Strength Index. It's what I feel is probably the single most telling indicator of just general trend direction, which is what I trade. Again, you guys, I'm not a day trader, but I do trade macro trends, and it's looking sketchy. When it's significantly overbought territory, it's the highest it's been once again in almost 3 years, when we saw this significant pullback. So I mean, just 101, you guys, what goes up must come down. All right, scroll down here one more time to the fear and greed, which I did bring up in Friday's Trading Week recap episode. Very, very important to know this, okay? When the markets are greedy, words of Warren Buffett himself, when others are fearful, you be greedy. When others are greedy, you be fearful, okay? And that's why I've been pretty sketched out over the and again, that's why I was almost able to call kind of the top on Tesla in a sense, like to toot my own horn a little bit. But it was just so obvious. There's so many signs that were pointing to a pullback. And again, I'm not sure exactly how far this pullback will go, but I think it's going to be pretty decent. Similarly, readings of investor bliss have hit levels not seen since the dot-com era. I mean, that's never, we all know the dot-com era was a bubble that did pop, so that's not good. Citigroup's panic euphoria model, which tracks metrics from options trading to short sales and newsletter bullishness, it's having its longest bull run of extreme bullishness since the early 2000s. A reading that tracks buying momentum against selling momentum in the S&P 500 has climbed to a record. Okay, so again, you guys, obviously this was March. That was extreme panic. That is a well-warranted panic. But now we've gone to the absolute opposite side of the spectrum. Once again, you guys, the thing everyone keeps saying, stocks only go up. Stocks only go up. When the market zigs, you zag. When that becomes common knowledge, that's when it started to scare me. When everyone truly believed, it became not a joke, but reality, that stocks only went up, because that was the temporary reality. I think that reality is no longer real. Okay, so I think that was a facade. I think that was a mirage, and we're probably looking for a pop, all right? So just to sum it all up, I'm bearish on the equity markets. Okay, so that said, again, you guys, there's such a big divergence in the markets and the economy right now. Let's take a look at this article from Morning Brew. This is an amazing newsletter, you guys. More just great news. Very, very well written, with a very easy to read, kind of satirical, comedic perspective. Okay, so that, as you can tell, they're involving memes, but really getting a good message across. So go check out Morning Brew. I will link the link to check out Morning Brew below. This isn't sponsored, but I'm a fan myself, so I want to support them. All right, U.S. debt forecast to exceed GDP in fiscal 2021 by Eliza Carter. Shout out Eliza. The Congressional Budget Office just dropped historic projection for the U.S. economy. It said government debt will reach 98% of GDP in fiscal 2020, which ends this month, and surpass 100% of GDP next fiscal year. The debt to GDP ratio is used as a way to contextualize countries' debt loads, and 98% is the highest it's been for the U.S. in generations. The last time U.S. debt exceeded GDP, aka economic output, was in 1946, after the government financed World War II. Again, you guys, we are fighting a war right now. It's not nearly as bloody. It's not nearly as tangible as World War II. Obviously, I would much rather live through what we're living through now than an actual world war. But it is still a war, and the economy is still just in shambles, you guys, and that's what sucks about it. So obviously, if we're projected to surpass GDP with debt, that's, again, we've never done that, or we haven't done that since World War II. I don't really even know what more needs to be said there, aside from the fact that just that is bad news. And again, I'm not sure. I don't even need to make an argument about this. I know you guys understand this, but I just wanted to put this to your attention. How we got here is result of increased government spending in 2017's tax cuts. U.S. debt was on the rise before the pandemic, but the country's finances took two major thwacks earlier this year. Congress passed trillions in relief spending just as pandemic restrictions dried up government tax revenues. Looking ahead, most economists and lawmakers agree that another round of relief measures are necessary, but negotiations have been stalled for about a month now as Democrats push for a $3 trillion plan and Republicans counter with a $1 trillion. So that is, I know a 3 and a 1 aren't very crazy on just the general number scale, but $2 trillion is a huge margin. Okay, $2 trillion is, crazy, and that's why, once again, you guys, I am bullish on Bitcoin. I'm bullish on sound money assets that can't just be printed out of thin air. In a world, once again, where literally trillions and trillions of dollars in fiat currencies are being printed and devalued as we breathe, as we speak. Okay, so that's sketchy. That just furthers my argument for, once again, sound money, safe haven, not even safe haven, just sound money, hard money, God's money, people's money, assets like Bitcoin, gold, silver. All right, once again, we will get to that after Robinhood and Mr. Ackman. So Robinhood is reportedly under SEC investigation, could pay $10 million fine again. Doesn't make a dent for Robinhood. $10 million, just brush it off. That's lunch money. But again, we will learn here how Robinhood actually makes money. Popular trading platform Robinhood is under investigation related to its disclosures around its practice of selling clients' order to high-frequency traders, the Wall Street Journal reported Wednesday. The SEC's probe into the Silicon Valley startup is an advanced stage and could result in a fine of more than $10 million if the company agrees to settle. Selling order flow is not illegal in itself, and most brokerages do it. However, more of Robinhood's overall revenue comes from the practice than other brokers. Robinhood made $180 million in trading revenue in the second quarter, roughly double from the prior quarter, as investors flock to platforms seeking to ride the historic market rebound. Okay, so again, you guys, Robinhood was the single app that did pioneer commission-free trading. That's because the way they make money is by selling order flow to high-frequency traders. So if high-frequency traders, these are hedge funds, these are institutions. A lot of the time, sometimes it is just smaller players, but high frequency, again, they're making a lot of trades and profiting off the small margins. So if say you're buying a stock, if Robinhood knows that you just placed an order for a stock at $100, and someone else who has more real-time data on the markets can buy it for 99, and they know you're going to buy it for 100, they profit off of that $1.99, 50 cents sometimes a margin, okay? But they're high frequency because they just make the load of those trades, and again, it really does add up. Like, each individual trade doesn't mean much, but it's obviously profitable over time. That's why they buy the data from Robinhood. Okay, so I just thought that was interesting. I wanted to share that with you guys, but let's move on to Airbnb spurs approach from Ackman's black check company. Billionaire investor William Ackman has approached short-term home rental company Airbnb Inc. about going public through a reverse merger with his blank check company, according to people familiar with the matter. The discussions are currently not moving ahead, and Airbnb is prioritizing going public through a traditional initial public offering this year in what would be one of 2020's most high-profile stock market debuts, the sources said. Representatives for Airbnb and Ackman declined to comment. Airbnb said last month that it had filed confidentially for an IPO with U.S. regulators. So we have talked on previous Waves Weeklies before about Airbnb's potential IPO. They are going to IPO. I think they're too late. Personally, I think they blew their shot. They should have done it. They should have done it a couple months ago. That would be the hottest stock in the market right now. Everyone knows what Airbnb is. Everyone stayed in Airbnb. I personally love Airbnb. And I think they missed their boat because, again, I do believe, as you guys know, I've said it many times already, just in this video alone, I'm bearish on equities, and I think they missed the boat. I think it's too late for Airbnb to have a successful IPO right now, which sucks for them because, again, they would have absolutely killed it. Again, Bill Ackman might have a harder time navigating this blank check company that has been kind of the talk of the SPAC world. Again, you guys, SPACs, one of the biggest things in the market. EVs, big in the EV sector, like Helion Tortoise acquisition is a good example of that right now. But you guys, SPACs hotter than ever. That's why Bill Ackman, once again, he did make one of the greatest short trades through this. He probably made the single greatest short trade this entire year, like through this financial crisis, this significant crash, which has turned into a V-shaped recovery in the markets at least. But again, he made a great short, and that's why a lot of eyes are on him as a huge institutional player in the markets right now. But it will be interesting to see how this plays out, how this pans out. Both sides, Airbnb's IPO and Ackman's blank check company, his SPAC. So as always, I'll keep you guys posted on that. Let's close this out with talking some Bitcoin and crypto. So 3 reasons why Bitcoin suddenly dipped under 10K today and recovered. The price of Bitcoin briefly dropped below 10K, causing the entire cryptocurrency market to slump in a short period. So I'm sure you guys are aware of this. Again, it is scary sometimes, but that's the beauty of the crypto markets. They never sleep. Even on weekends, we have some excitement and something for me to talk about with you guys. Okay, so once again, we will look over this real quick just to give you guys a real-time update. I am recording this on Saturday afternoon. So by the time you look at this, by the time you're watching this could be significantly different. I will still let you guys know what I'm thinking on the charts, at least in regard to Bitcoin. Okay, so you're seeing this Chainlink again, Polkadot, the DeFi sector, just because it's been so blown up, is correcting. Bitcoin is staying pretty stable though, which is nice. Obviously, Bitcoin is a significantly larger asset. It's seen less of a rally than the DeFi space and a lot of the hype coins, the hype plays in the sector. So it makes sense that you're seeing less volatility, which is good in my book. But let's get to this. I have just a few pieces of, I just want to read a few statements from this article that I want to share with you guys. So 3 factors likely contributed to the abrupt drop in Bitcoin, including miners, a strong dollar, and whales taking profits. So it's not necessarily this drop that I want to share this article with you guys, but it's to understand if you do want to be involved in this sector, you have to understand that this happens all the time. And these three factors, the majority of the time are the primary contributors to why Bitcoin falls. So a lot of times, did whales take profit? So I want to read this for you guys, even though I didn't highlight it. But a lot of the time, when the price of Bitcoin suddenly dropped by 5% today, BitMEX liquidations were below 40 million. Typically, when a massive price movement occurs, it caused over $100 million worth of futures contracts to get wiped out. So this is important because it doesn't just apply to Bitcoin. Okay, so right here, $100 million worth of futures contracts get wiped out. Okay, so that means they get short squeezed. or that means they get long squeezed. All right, so people who have calls on certain calls in Bitcoin in whatever stock you're talking about. If a whale dumps a significant amount of that asset, cause it to go below the price that would cause a squeeze, cause them to get squeezed out of that call or put position. It works both ways. That's why it's called a long squeeze and a short squeeze. That's the action. It's not necessarily the large player, the institutional player, the whale selling or buying. It's what that does to the contracts, to the futures contracts. Okay, so keep that in mind, you guys. That's a big factor that always does lead to significant price action and causes that snowball effect within Bitcoin and stocks, whatever asset class you're talking about. But whales taking profit at 10.5K, which has historically served as a multi-year resistance level for Bitcoin, is more likely. So again, you guys, you have to remember that Bitcoin is full of very competent traders, probably more than any asset class on earth. Bitcoin has great traders, has very technically savvy traders and very complex algorithms trading it. So just keep that in mind. Some miners are potentially selling. That's to be expected. Sometimes when miners are whales as well, they also have complex algorithms. They also have great trading teams that decide when they want to liquidate some of their Bitcoin positions, and that happens sometimes. And right here, what we talked about in the beginning a little bit, a strong dollar and Ether weakens. A common theme throughout the past 2 weeks as Bitcoin consolidated was a strengthening of the US dollar. The USD began to show signs of recovery after 4 months of downside, while the euro began to slump. Since both Bitcoin and gold are valued mostly by the US dollar and many BTC traders are based in the United States, the increasing value of the dollar contributed to BTC's weakening momentum. So once again, you guys, this also applies to just markets around everything. Just all markets overall. Okay, so we'll look at the dollar here. Again, you guys, the dollar actually did break above just today, this lowering trend line. So right now, the dollar is actually poised to maybe, which this does worry me a little bit right here. So the dollar might come up and test this area right here. If the dollar breaks out of that, then that is something, then I would definitely expect equities, Bitcoin, gold. I would expect every asset to drop again, and we might see another liquidity crisis like we saw back here. Okay, so this is what happened to the dollar during the liquidity crisis. A liquidity crisis is when every asset on the planet drops, even gold, silver, Bitcoin, what are perceived to be safe havens, stocks, of course, obviously included, and everyone wants dollars because everyone's scared. Everyone wants US dollars. Everyone wants what is perceived to be the safest asset, which is the US dollar. That's why we see right here when the stock markets, literally every asset on the earth aside from the dollar tanked, the dollar saw a crazy spike up. Okay, so it was at 102. It is now at 92. So it's seen a significant over 10% correction. And it is currently bouncing. Remember, you guys, although it is still in an overall downtrend, like you can't look at this chart and be bullish on this chart in any sense, but it wouldn't surprise me at all to see a little bounce. Okay, so we might see a bounce up to this second level of resistance. If the dollar does break above that, that will be worrisome for gold and stuff, and I will personally have to reevaluate a bunch of my safe haven hedging positions for the short term. But I still think the dollar's in a downtrend. There's no way that it won't continue this to some extent because, again, we're printing trillions of them. Like we just looked at, it's either a 1 trillion stimulus plan or a 3 trillion stimulus plan. So either way, that's a lot of money. Keep in mind, you guys, that the market cap of Bitcoin is 200 billion, just a fraction of 1 trillion. So that's a fifth of 1 trillion. Just keep that in mind. But that said, whatever happens, we will see how it plays out. You guys know I'll keep you posted, and I'm excited to see what happens. Let's get to Bitcoin. So gold, silver are up right now. We'll take a quick look at gold, silver, and then close out with Bitcoin. So gold did break this short-term downtrend. It is kind of printing a bull flag, as you guys can see here. I'm not going to draw it out because I trust you guys, especially if you've tuned in. You know what a bull flag looks like at this point. At least you better. But yeah, we see somewhat of a bull flag printing here. Remember, a sharp move up followed by a descending triangle. And again, you guys, I'm just super fundamentally bullish on gold, even more so on silver, although silver has seen a significantly greater move up. Seeing a similar bull flag play out here, we will have to break above this level, but I think silver is very light. Like this is even more of a textbook bull flag right here. So obviously, you see the pull. The flagpole right here, descending triangle will probably break out somewhere middle of September, I'd guess. So over the coming week or two, I think we'll see a significant breakout in silver. Personally, I will be positioned for that. And then in Bitcoin, I have two Bitcoins, and this is the one that all this stuff is drawn on. I gotta put these together. Okay, Bitcoin. Again, you guys, there's a lot drawn here. I do think I do think that obviously as bullish as I am on Bitcoin in the long term, I'm still looking at it, trying to doing my best to look at it through a rational lens. And it just makes perfect sense to me that we're going to see a pullback to like 9,500, 9600. Again, you guys, there is that CME gap that we talked about the other day. On Bitcoin around the $9,700 mark. 9,500 does bring us down to use this area that was ultimate resistance as a line of support. So I think it's a healthy correction. If Bitcoin breaks below, I'll say if Bitcoin breaks below like 9,200, then I become short to medium term bearish. Okay, so still long term bullish. I still think that by the end of the year we will see probably a $20,000. I would guess a $20,000 Bitcoin by the end of 2020 personally, but the short to medium term time frame does get a lot shakier if we break below. Probably like 9,300 to be honest. Okay, so if we close a daily candle below this line of support, then that makes me sketched out again on a short to medium term time frame. So hopefully that doesn't happen. We are seeing a decent bounce right now. Again, you guys, weekends are always shaky, especially a 3-day weekend when again, there's a lot of traders out there right now who aren't getting their fix. They're going to want some excitement right now. So it will be interesting to see how such a volatile market environment, because again, you guys, the markets did close the week on a very bad note. Like after hours, everything was tanking, even though it did pop at near the end of the day. It will be interesting to see how that reflects on Bitcoin, gold, silver, the cryptocurrency market, and how what goes down on Monday. So we will see. As always, I will keep you guys posted. I am posting the stock watch video tomorrow, so stay tuned for that. Obviously, primarily focusing on hedges, on what I'm playing myself. So assets like Bitcoin, gold, silver, like we're talking about now. The VIX, I'm excited to talk to you guys about the VIX and VIXI. Those are some of my favorite plays personally right now. We'll talk about how you can play volatility. And yeah, we will. I'll touch a little bit on Moderna, Sorrento. I know a lot of you guys are interested in that, so I will touch on those a little bit. We will have to see if Moderna and Sorrento do continue, or not even continue, but do act as a hedge to equities like they have in the past. So when like the tech sector falls, obviously with capital flows out of that, it wants to flow into more promising sectors. COVID cases are going up. I will probably reference that article in tomorrow's video about how prior to Labor Day, COVID cases are spiking up again. We're seeing another surge in COVID cases, so that will turn some attention to COVID-related biotechs. That it only makes sense to me. And again, we'll see if they act as a hedge. Hopefully they do, because I am still positioned. Just for full transparency, we'll talk about that more tomorrow. As always, you guys, please drop a comment down below. Let me know what you think about any of the things we talked about today. Let me know what happened this week that you're excited about that we didn't talk about, and let me know what you're looking forward to, what you're doing for Labor Day. Happy Labor Day. Again, you guys, cheers to that. I will pop a claw after this bad boy, and yeah, you guys have a good one. And as always, until next time, you guys, always remember, take action, make waves. Peace.